Picture this: 3 board members staring blankly at a 20-page financial report. The treasurer points to a concerning number and asks, "Any questions?" Nothing but silence. A few months later, a $50,000 special assessment blindsides the entire community. The truth is, financial literacy isn't just nice to have as a board member. It's the difference between protecting your community's assets and watching them deteriorate. Let's talk about the most important financial metric for any community: cash flow. It's pretty simple: the money coming in versus the money going out. Here's something many board members miss. Your budget might show you're in the black on paper, but that doesn't always mean you have enough cash to pay your bills. Why? Because some expenses on your financial statements, like depreciation, don't actually require cash. So you could look financially healthy while struggling to pay vendors. What should you do? Always ask for your monthly cash flow statement and actually review it. Look for patterns. Is your available cash growing, staying stable, or shrinking over time? If you're seeing negative cash flow consistently, that's a serious red flag, even if your budget comparison looks perfect. Your community's delinquency rate isn't just about who owes money. It tells a much bigger story. Here's what's happening behind the scenes that most people don't realize. Your financial statements record all dues as income when they're assessed, whether owners actually pay or not. The unpaid assessments show up as accounts receivable on your balance sheet. This creates a disconnect between your income on paper and the actual cash you have available. In a healthy community, you want to keep delinquencies under 5%. When that number starts climbing, it doesn't just hurt your cash flow. It can signal deeper community issues. And here's something to keep in mind. Sometimes when you start cracking down on collections, this number might actually look worse before it gets better. That's completely normal. Don't just focus on the total percentage though. Ask yourself, are the delinquencies concentrated among a few owners or spreading throughout the community? Are the same people always late, or are new names showing up? Understanding these patterns helps you address problems before they become financial emergencies. Your reserve fund isn't just a savings account. It's your community's financial safety net. The key number to watch here is your percent funded ratio, which compares what you actually have in reserves to what your reserve study says you should have. Communities that maintain at least 70% funding typically avoid special assessments and maintain better property values. If you're below 30% funding, you're in the danger zone, where special assessments become almost inevitable. Make it a point to review your reserve study annually. Track your percent funded ratio every quarter and never, and I mean never, borrow from reserves to cover operational shortfalls. Make those reserve contributions non-negotiable in your budget planning. They're just as important as paying your insurance bill or your landscaper. Understanding these 3 metrics, cash flow, delinquency rates, and reserve funding ratios, gives you the foundation to make smarter decisions for your community. Start by requesting these specific reports at your next board meeting, and don't be afraid to ask questions until you truly understand them. The communities that thrive financially aren't necessarily the wealthiest. They're the ones where board members commit to understanding these key numbers and making decisions based on data, not guesswork. Your neighbors are counting on you to protect their investment. Having the right financial knowledge helps you deliver on that responsibility. If you found this perspective valuable, we invite you to connect with us. Facebook viewers, like our page and follow us for regular updates. Feel free to message us directly with your questions or community challenges. Instagram viewers, hit follow and feel free to DM us with your questions or community challenges. YouTube viewers, subscribe to our channel and check out the video description for helpful links. Visit our website to discover our thought leadership content, books, and resources that can transform your community management approach. Whether you're dealing with the challenges we discussed today or other community issues, we're here to help. Thanks for watching, and we'll see you in the next video.